Welcome again to another episode of Heartland Market Talk on the open range. Well, it's been a dynamic week. Gold slipping sharply, well over $100 an ounce here in two sessions, as the Fed minutes that were released Wednesday showed a hawkish attitude in the meetings that the Federal Reserve was having. Some comments were, why are we even considering raising or even lowering rates later this year, which prompted the selling to start yesterday for silver and gold, which spiraled into today's action despite pleasant stock reports. We had heard today Nvidia had released earnings well above expectations. Of course, their artificial intelligence-led division was where the profits came from, but stocks ignoring that, selling off abruptly as they had built in quite a consensus that we're going to see rates cut later this year. So these Federal Reserve minutes definitely spooked the metal markets and the stock market and drove them down. Now, also not left out was oil. Oil prices down again for the fourth session in a row today, back to the low values of the year. Now, here we are in front of Memorial Day week, and typically oil prices bottom in the winter and trend higher into May and June. But that abruptly changed with our spike in oil prices back in April, early April, might add, when oil prices got to $87 a barrel on the Hamas and Israeli fighting, when they thought there would be difficulties with oil production in some of those areas if the fight pushed deep into Iran. Well, of course, that's not the case. So now the market is focusing on the slowing consumer demand and, of course, the possibility of the R word. Recession, soft landing right now is a conversation if rates aren't returned lower later this year. Now, the Biden administration, to add to lower prices, of course, politically motivated, they're going to release 1 million gallons of strategic reserve gasoline. That's, designed for problems whenever something arises where we have shortfalls, maybe pipelines are cut, or we could have several refineries go down. He's just using it to soften prices of gasoline on the eastern coast, so people think all is well, when instead they're using our public safety net of reserves to do this for political reasons. Now, finally, Russian wheat prices have risen. Russian wheat woes on their wheat production are becoming known. Well, is that also good for corn? Yes, because wheat, when there's excess supplies of wheat, it's fed to livestock. Well, as the losses mount here for wheat production, that means less will be allocated to livestock, which opens up the door for more usage of corn, which of course is the main reason we grow corn, is for livestock production and use in the poultry, pork, and the cattle field. Now it's time for Heartland Insights. As we talk about the Russian wheat crop shortfalls, of course, it's the Black Sea region. Where I'm circling here is the Black Sea. And of course, the Russian wheat area in question continues to remain dry here through Sunday, June 24th, while even eastern Ukraine also continues to have the same woes. So total Black Sea wheat production is on decline. Just to remind you, in Ukraine, it is that eastern portion of Ukraine where over half the wheat is grown for the Black Sea region. And as we go to Russia, here again, here is the Black Sea region. This is that dry area I had highlighted where the rainfall comes up short. And of course, going into Ukraine as well. Now, also weather issues, of course, the ongoing rains that continue to drop 4 to 6 inches of rain. We have through June 2nd right now. We have southeast Iowa, northern Illinois, into eastern Indiana. Rainfall potential of, again, anywhere from 3 to 4 inches over the next week, which of course is hampering that production of getting corn in on time. And it's because of that production cutfalls that we're seeing corn rally because of potential preventive plant taking over and reducing maybe planting of corn by 1 million acres. Now, Kansas City wheat rallying at the end of the week to our best levels. Likely a Friday close could put in the best close since going back to last October. But we're behind the European French milling wheat contracts. They're already up to the valuations seen last summer in June, July, when we had seen substantial gains. So the wheat prices continue to move higher abruptly as the world has been taken at surprise with what's going on in Russia. And of course, corn values holding up. They tried to sell corn off after a spike into last week, but we are seeing moving average support. We call this here in the technical trading side, finding support this week, and corn likely trying to revert itself back to the upside. Same thing for soybeans. Despite bearish news that China hasn't been buying beans, we're seeing our prices elevate anyway as Brazilian prices elevate, and we are actually quite competitive with Brazil. So these price rises we're seeing are available to China even at better rates than out of Brazil. Crude oil. We've been alluding to the fact that the crude oil has been stalling at the trendline support and we're not getting decent bounces. We even said earlier this week that the fact that we can't break the downtrend line is concerning, that oil prices are heading lower, contra-seasonal. Even if we move this downtrend line down farther, you can see it's going to be resistance to further movement. So again, oil prices on decline. It looks like we can see lower gas prices at the pump, not only through Memorial Day, but after Memorial Day into the summer driving season. Gold, of course, abruptly reversing early week gains as those Federal Reserve minutes implied. Rates could stay high through the end of the year, and the dollar on those minutes prior, we showed you the dollar chart hitting trendline support, and it is turning higher, likely of a dollar strength could occur here into June and July, which would be detrimental to the price of gold as a rising dollar is negative for petrol prices. Gold, also trendline support here we could bring into question after severely breaking here from these highs. We are also breaking trendline support on gold, allowing for the lows just made a month ago near underneath 2,300 could be tested soon as the market tries to go into probably a sideways market through the summer. But it is normal seasonally gold peaking in the second quarter, April or May, and then we typically soften into the month of August. That's possibly setting up for this year. Silver, also bolting to new highs, best prices we've seen since 2013. Of course, turning back lower after several sessions from a high of over $32, got to $32.75. Now turning back lower. We'll see if we can get a close on a Friday above $30. If not, the correction could be severe in the silver market. It's time now for our question of the day, and we invite our viewers to send your questions in to info@heartlandinvest.com. Doesn't matter, stock market, commodity market, we'll take a look at your question and we'll answer it for you. So now we had a question for, I hear the terminology slippage. What does that mean? Well, slippage is what occurs in very thinly traded markets. For example, when you place stops in the market, a predetermined exit point where if you're invested to go up, below you, you have a stop to knock you out if the market drops too far. Well, in thin markets like cocoa and coffee and sugar, your stops can get skidded. And of course, your price may not be at your stop. So this price difference from where your stop price is to your actual fill, we call this slippage. Same thing goes to the upside. Say you are a short seller trying to make money to the downside, but you have a protective stop above the market in case it rises too far, and you do not want to finding yourself with excessive losses. And especially in these thinly traded markets, even lumber is involved like this, you can get big slippage, meaning your stop gets triggered and it fills considerably above your predetermined price. Again, that's the answer to slippage. Remember, you can always call us at 701-222-0221 or visit us online at heartlandinvest.com. While you're there, don't forget to check out our Heartland Market Talk podcast and sign up for our daily newsletter. And for producers, remember, we offer crop and LRP insurance as well.